This is segment 3. Hello, my name is Tom Harris. I'm the director of the University Center for Economic Development. And this is part of our University Center economic activities along with the University of Nevada Cooperative Extension Risk Management Program. Mike Helmer is here to discuss cow-calf prices, which cow-calf operations are very important in the state of Nevada. Mike, what do your graphs talk about today on the future of cattle prices?
Yes. Well, I just want to start off with the obvious development in the cow-calf industry, and that is the sharp drop in prices that we've seen. Yeah. We started to form last year in 2015, it's persisting this year, and we expect to slide not as rapidly as it was in the last couple of years, but still to go on till about 2019 or 2020. And we have a cycle in the cattle industry, and we're following the cycle down, and we'll have nationally, we have expanding breeding herds, and yet at the same time, we still have enough supply of slaughter animals online to meet those needs. And so we're seeing a drop in prices. As prices decline over time, what we're going to have is ranchers will start holding back fewer animals for breeding, and will produce more, and then we'll start seeing animal numbers drop and slaughter animal availability decline. And at that point, those prices will start to build back up. But that takes several years to work through the cattle industry. Okay. So right now, we're in the downward section of that cycle, a section where we just came out of a real sweet spot for cattle producers a few years ago, and now it's not so sweet. Mm-hmm. So the first slide that I'm looking at shows just exactly that. We have the U.S. slaughter steer price, which is the red line, and then we have a U.S. feeder steer price. We have the U.S. slaughter steer price, which is the blue line. The slaughter steer prices are lower. The heavier animals are lower on a dollars per hundredweight or 100 pounds basis. All right. Then the red line is the U.S. feeder steer price. And the green line is the Nevada feeder steer prices. And Nevada generally holds a little bit of a premium to the U.S., but not much. It follows it very, very closely. And as you can see, the top 2 points are 2014 and 2015, and these are average year prices. Mm-hmm. That's where the cattle prices topped out at. And you might look at it and say, well, that 2015 price doesn't quite feel like what it was at the end of the year last year. And it wasn't, but that's an annual average. That earlier in the year, it was actually much higher than what we're seeing here. And now it's coming down, and will continue to decline over about the next 2 to 3 years as we move through the cattle cycle. And so now that we've looked at kind of how the prices looked, and that it does look a little dismal for ranchers, we want to show some things that are not just local of local import to the cow-calf industry or the beef industry in this country, but the international developments that are happening. If we look at this one, we've got a trade gap right now. The blue line are imports of beef into this country, and we do import beef primarily from
Argentina?
Primarily from Canada. We import some from Argentina, and in the past have imported some from Australia and places like that. The red line are our exports, and we've got quite a few countries around the world that we'll look at here in a minute that we export beef to. But in 2015 is kind of that lowest point on the red line of our exports. Well, there are a couple of things that happened there. We had very expensive beef in this country because of our cattle cycle. Our dollar was very strong, and so we lost some exports to a lot of countries around the world.
Competing with other nations that have more favorable exchange rates.
Favorable exchange rates, and also our major producers. As you mentioned, Argentina is one. Australia is a major producer in the Pacific region.
Right.
And so forth. And the blue line, we imported more because of the terms of trade, again, made foreign beef cheaper in this country. But as we move out over the next few years, the cattle prices have dropped. As the exchange rate stabilizes, not falls, but stabilizes, we expect to see that trade balance to flip a little bit once we hit about 2017 or 2018, that we will begin to export more beef than we actually import. Now, I want to make sure, one thing here is that this is a quantity chart in terms of billions of pounds. Okay, So we see how prices have affected that. The other thing that will drive this, there's a couple of things that will drive that. One is the global economy is improving, and so places that have demand for beef will outpace their ability to produce it, and they will turn to the world market for that. Another thing is that we're still kind of have a little bit of a hangover from the 2003 mad cow disease, BST issue here in this country.
You can see that red line that went down.
Yeah, it went down. You can see that there. We're coming back, though. Most of those countries that completely shut off imports of U.S. beef are coming back, primarily Japan and South Korea. But now, recently, we are beginning to see negotiations and the probability of opening up the Chinese market. They were a little reluctant to buy our beef as well. And now it looks like that Chinese market may open up to us. Not expected to be a huge market for us, at least initially. Who knows how it's going to develop, because you never can tell with China. But it's expected to be a market that will open up for us. And so that will be an advantage to U.S. beef producers.
Is China getting most of their beef from Australia?
They get it from Australia, again, in the Pacific region. There are relatively few other places that can access that, that market very well.
But we find as incomes in China increase, their tastes will increase for beef.
Their tastes have been increasing, their tastes shifting, and that's another good point, Tom, is that some of our export growth is due to just that. As incomes grow in other parts of the world that haven't had the same sorts of tastes that we have, they can now afford these things, and their tastes and preferences change. But this chart here shows our beef exports in value terms. And we can see what has happened. And the last two ones are, I just wanted to be able to say something about 2016. That year's not over with, and the data's not in. So I use the first 6 months data, which is in, and compare that to the first 6 months of 2015. But as you can see that through 2014, the value of our exports, as we recovered markets after the BST scare here in this country, increased. And in 2015, we saw the drop in quantity of exports. It also translated into a drop in the value of exports from the U.S. And as we can see, if you look at the first half of the year columns, that in 2016 so far, we're lagging behind even what we did in 2015. We expect that to recover, particularly as our beef becomes more accepted elsewhere and prices stay down. But at this point right now, our beef exports are kind of languishing just a little bit. So it's right now is kind of a difficult time with lower prices and exports being off for our beef market.
Right.
So I want to take a little bit of a shift and look at the Nevada situation here. And what this says is that cattlemen will fight lower prices, small breeding herd. The down point what we have here is the blue line at top is our beef cow inventory in Nevada. Okay, that's in terms of 1,000 heads. And the red line is our calf crop. And so we're fighting a couple of things here. One, we're fighting lower prices right now in terms of expanding the breeding herd. We would have liked to have expanded it in the last few years, but the drought
didn't help.
The drought hit us at a time when we wanted to expand. We had the economic incentives there to expand. So you can see that particularly in 2015, that drop in our beef cow numbers of probably about 20,000 head or so. Which is a big deal for Nevada. And when you drop your beef cow numbers, of course you're going to be able to produce fewer calves. And that's what's going to be fought here. Is now we have a smaller breeding herd that we have to try to build up at a time when the economic incentives are a headwind to us. It's going to be difficult to do, and it's going to be very, very gradual, and that's going to constrain our calf crop over for a few years until that recovers. And as you constrain the calf crop, Nevada is a cow-calf industry. That's what gets sold. That's what gets marketed. That's how these guys make their money. Sure, they cull a few cows and all every year, but for the most part, it's by selling the calves, and that's going to put a constraint on profitability in the Nevada cow-calf industry, in addition to the lower prices. So So this is one where it's kind of our bottom line for the cow-calf industry here in Nevada. And it's just the fact that there's not much profitability left in this cycle. It makes it very, very difficult to expand anything. And even if you don't expand, it might make it extremely difficult to just maintain
your
what
operation.
you've got now,
Yeah.
particularly in the face of grazing constraints, grazing land problems, issues and stuff, with fires out there, sage grouse habitat and things of that nature that ranchers are running into. The fact that the drought, even if it's over, we still have lower stem counts out there in our grasslands, for grazing. It takes a while for those to come back, particularly the perennial grasses, the bunch grasses. So it becomes more difficult. It takes more land to feed a cow and a calf. Even that's
With the lag
leased
effects
land.
of the drought.
Of the drought.
Just because of drought in 1 year, there's lag effects.
Yeah. The drought impacts will carry on for several years. And again, like I said, the fire issues. So our ranchers that are in the south part of this state are almost solely dependent on grazing land. And in the north part of the state, at least half of it is dependent on, or about half of it is dependent on public lands. Have these issues of whether that those allotments are going to be there for them. That's a big risk going
Or
forward.
what degree?
Pardon me?
How much of the carrying capacity are on these allotments too?
Yeah. Yeah, so that's a big risk for our cow-calf industry as we move forward. But regardless, even if we assume that they're going to maintain those grazing allotments and the feed is going to be there, or the forage is going to be there, as we can see that the bars are costs in the cow-calf industry. The blue line is the purchase feed cost, and as you can see, that's relatively small because of the grazing. It's smaller for Nevada than it is for other parts of the country that have to purchase a lot of feed. The red line are other feed costs like homegrown feed, what a rancher might produce himself, and then the green line is other operating costs that kind of grow with inflation rates. And as you can see, those go up slowly over time, so the costs are much less volatile than the gross value of production or the revenue line, and that gross value of production really mimics the price line. The price line. As you can see, that it's dropped quite a bit into 2015 and will continue to drop to where profitability will be just about completely squeezed out by about 2019 or 2020, and then it'll come back as the cycle turns up. But right now, it's our ranchers are looking at a period of time when they can be substantially squeezed.
Okay.
That's it.
All right. Well, thank you, Mike. And again, if you have any comments, please send them our way. And as I said before, this is primarily for education, and these are not financial recommendations. So thank you.